Hey there, business owners. On today's episode, we're going to be going over 20 tax questions every business owner wants to know. So stay tuned.
Welcome to Behind the Business, the podcast where we cut through the noise and get real about running a profitable business. I'm Pamela Hilton, CPA, with over 30 years in accounting, tax, payroll, and business advisory services. Each week, I will share stories from the field, answering real questions from business owners, and give you the straight talk you need to grow and protect your business. No fluff, no hype, just practical advice that works in the real world. So let's get to it.
Behind the Business. This episode is all about 20 questions I get asked, most commonly asked from business owners about their taxes. Let's jump right in. The first question is, how much money should I be setting aside for taxes? It's not really a one size fits all. There's no one right answer. It really depends on how you're organized and, what you did last year in taxes. The key things you really need to have in place to be on point with your taxes is a really good accounting system. You have to have it up to date at all times, and you really need to do tax planning and have really good tax strategies in place and be aware of what your federal versus state taxes are and what the laws are. But as long as you are working with an expert tax person or CPA, and they're on top of your tax situation, you're doing tax planning, and like I said, your accounting is up to date, and you're paying your estimated tax payments in, and you've got some really solid tax strategies in place, then it really shouldn't be a problem. Your taxes and your tax payments, what you're paying in for estimated tax payments, should just be a normal, one of just your normal expenses, business expenses throughout the year. And it shouldn't be this huge burden at the end of the year. And if it is a huge tax burden for you at the end of the year, then you should be doing these other things instead, like having your accounting done on a regular basis and having tax strategies in place instead of waiting until the end of the year. Number 2, can I write off my vehicle? Yes, if you are using your vehicle for business purposes, you can write off a number of things. First, you can write off your business mileage. Second, you can write off the cost of your vehicle, either if it's a leased vehicle, the lease payments, or you can take the depreciation on your vehicle. So there's a number of things you can do. You can write off if you use your vehicle for your business. The main thing is you have to have your documentation. If you have a loan on that vehicle, you can write off the interest on the loan, but you have to document it. And again, it all goes back to the accounting, making sure you're documenting it and you're recording the asset on the books and the depreciation if you're taking depreciation, and the loan, you have to record that on the books, and then your loan payment and the interest, making sure you're recording all of that in your accounting system and documenting it all. And then you can take those write-offs on your taxes at the end of the year. Number 3, should I be an LLC or an S corporation? And the answer to that is it depends. And also, you can be both if you wanted to. So it's kind of a complex answer to that question. The LLC is a legal structure, and the S corporation election is a tax election. So you can be an LLC in your state, and you can also do an S election for your taxes. So you can be both at the same time. And you really should consult your CPA or tax professional to see, how to do both if you need to be both or if you want it to be both, and what the effects are on your taxes, what advantages or disadvantages are for both. Because being an S corporation, yes, there are certain tax advantages, but with those advantages come a cost. If you're going to be take the S election, now you have to file a corporate return, and that's going to cost you more in tax prep fees. It's going to cost you a few $1,000s to pay somebody to do an S corporation return because they're much more complex. You have to have really solid accounting numbers to prepare an S corporation return. And the IRS is going to require you to have payroll and issue W-2s. You, as the S corporation shareholder and owner, have to take payroll. And so you're going to the cost of running payroll is again going to run you a few $1,000s a year to run payroll. So there's that cost. And those extra costs, is that going to offset the tax savings? You have to kind of take all that into consideration. Should you be an LLC or an S corporation? Really depends. You have to kind of run run some scenarios to see if it's worth your while to be the LLC or the S corporation or both. So it really depends. What can I actually deduct as business expenses? So it really depends on your industry. I always tell clients, leave that up to your CPA and your accountant to determine what is the business expense for you, your particular business, your particular industry. Discuss it with them, but it has to be ordinary and necessary as a business expense. Do not believe all the hype you hear online with these tax influencers who tell you you can write off everything, because it's simply not true. You can't write off all these crazy luxury items because it's not usually ordinary and necessary in most businesses. You have to have documentation, and you have to, like I said before, you have to have documentation. It has to be in your accounting system. You have to have really solid numbers, and it has to be a legitimate business expense for your industry. And you have to know, and it has to be, you have to know the difference between personal expenses and business expenses, and make sure you're keeping those two separate. We've talked about that a lot on my podcast, and making sure you're keeping things very, very separate in order to make sure you're not blurring those lines between business and personal. But it really depends on your industry, and make sure you go over that with your CPA and tax professional so you're very clear on what's ordinary and necessary within your industry. Number 5, how do I know if someone should get a 1099? This is kind of a complex topic, and I should probably do a whole separate podcast on this. But typically, anyone who you pay for services in the course of your business throughout the year, who's not incorporated, who you paid over $600 to in the calendar year, should get a 1099. They're typically going to be considered, non-employee compensation. The only exception is if you pay them with a credit card, because the credit card company then issues the 1099s at the end of the year. But usually this is a service we do for our business clients. We kind of go through their books. If we do their accounting for them, we run through all their transactions and see if they need to issue people 1099s. It's a service that most CPAs will do for you if they're doing their accounting. If they do their accounting for their clients, they will let you know if you need to issue 1099. But it's a fairly complex task, but every business owner has to run through that exercise at the end of the year to determine if they need to issue 1099s at the end of the year. And you have to do this every single year. You have to kind of run through who you've done business with every year to see, okay, I did business with this person. I don't think they're incorporated. I did pay them over $600. I didn't pay them with a credit card. I'm not sure if they're incorporated or not. You can find out if they're incorporated or not by issuing them a Form W-9. It's a free form you can get from the irs.gov. You can just email them the form. It's just an informational form. They fill it out and they send it back to you, and they check the box on whether they're a sole proprietor, a C Corp, S Corp, and they'll send back the information to you. And then you kind of keep that on file, and you keep, a file of all the W-9s you get throughout the years of all these people you've done business with. And you have to do this every year. And unfortunately, again, you have to keep really solid accounting records. 1099s are due January 31st. You have to issue these. So you have to have your accounting up to date so quickly at the end of the year, because you have to then issue and send out these 1099s within 30 days practically to make sure you're in compliance with the 1099 rules. So that's why we do these for clients, because it's very stressful at the end of the year getting their books together and then sending out these 1099s. But again, if you have to issue 1099s, it's one of those year-end tasks you have to do for every single business owner. Even if you don't think, we ask everybody at the end of the year, hey, did you have to issue 1099s? We always get no's. And then when we go through people's books, we're like, you did. There were a few people that we think you probably should have issued 1099s to. So it's one of those things we ask everybody, run through the list of everybody you did business with this year and see, and double check to see who you paid, who you did business with, and who you paid money to, because it's a very, very common mistake. People think that they're immune to this, but they're really not. Number 6, why do I owe tax if my business didn't make much money? This is a big one that I hear a lot. Like, I really didn't make any money. How do I owe taxes when I don't have any money to show for it? I wasn't very profitable, or we didn't make much money. So cash flow and taxable income are two very different things. They're related, but they're not the same exact thing. And unfortunately, some things that pertain to cash flow, it's really what is deductible, and some things aren't deductible for taxes. And you think they might be, but they're not. So it all depends on what is deductible for tax purposes. It may be money that's coming out of your pocket, but the IRS doesn't allow it as a tax deduction. So that's where that discrepancy comes into place. And that's where you have this, that creates this taxable income that, it catches you off guard, and you're a little surprised that you have this taxable income when you didn't have the cash flow to back it up. So that's why you have to be that's why we do what we do when we're working on your accounting system, and we're categorizing things, because we're categorizing things in your accounting system from a tax standpoint. So we're looking at things as it pertains to both cash flow wise, so you can make management decisions from a cash and cash flow standpoint, but also we want you to see things, what's going to look like at the end of the year for tax purposes as well. So there's lots of differences there, so that you're not caught off guard. So we can see, okay, the tax wise, you're going to owe this amount, cash flow, this is how it looks. So that's why things may look a little bit different, because tax rules are very different, look very different than it does cash flow wise. Number 7, should I pay quarterly estimated taxes? Yes and no. It depends on, again, what your taxable income looks like. And the most tax software out there, the tax software, professional tax software that we use, will calculate that for our clients. And we automatically will create estimated tax payments for clients if they reach certain thresholds where estimated tax payments are required for them. So we will generate estimated tax payments for these clients to avoid next year penalties and interests if they're required for them. So they won't have to pay penalties and interest for next year. So generally, if you are a business owner, you don't have any kind of W-2 withholdings, you're going to probably fall into the category of, yes, you have to pay estimated tax payments. If you're a W-2 employee, you're paying withholding taxes on a regular basis. If you are not, and you're a business owner, the IRS, the state governments do not want to wait a whole entire year to get paid via your income tax returns. They don't want to wait a whole year. So they're allowing you to pay quarterly. So you're going to pay them at least quarterly instead of waiting until the whole end of the year. So that's why you have to pay quarterly. Right, number 8, can I deduct my home office? It depends. In most cases, you can. If you are a sole proprietor or a single member LLC and you are preparing a personal tax return with a Schedule C, then yes, you can claim the home office deduction. We have a home office deduction handout on my website, which is PamelaHiltonCPA.com. That goes over all of the details of the home office deduction expense. And yes, you can deduct a portion of your home expenses as the home office deduction. And how it works in a nutshell is you get to deduct a percentage of your home, and it's based on the square footage. So what you do is you take the square footage of your home office and the square footage of the entirety of your home, and that percentage, you get to deduct mortgage interest, real estate taxes, utilities, things like that. Again, you have to have really great documentation, and you have to use it exclusively for your business. So just really be diligent about your documentation and, have it set up as a home office. But yes, you can deduct your home office expenses. One of the great strategies we use for smaller home-based businesses. What is the biggest tax mistake business owners make? Oh boy, there's so many of them. But one of the biggest ones we see is DIYing their accounting, just buying into the hype that the bookkeeping is easy and they don't need accounting software. One of the biggest things is just really not having the proper accounting. Once your business reaches a certain point, you're reaching six figures or you're incorporated, you're an S Corp, C Corp, multi-member LLC, you have to have like software and real accounting, not doing tax planning, not paying estimated tax payments, not having a dedicated business bank account or business credit cards. Those are some of the biggest ones I see in my practice. Those are the glaring ones. And then just waiting, procrastinating, not having any kind of like tax strategies in place, and then waiting until the end of the year to kind of put a strategy in place. And then not having retirement plans. I think that's another one, not having a retirement plan put in place. Can I deduct meals and entertainment? Yes, you can, but I think there's such misconception about what's deductible as meals and entertainment. Treating yourself to lunch every day as a business owner is not deductible as meals and entertainment. What is deductible as meals and entertainment is entertaining a client, a potential client, networking with a client. Those are legitimate meals and entertainment expenses. Just eating, you have to it has to have a business purpose when you're out dining, entertaining with a client, and keeping really good records. Just swiping your card at dinner isn't enough. You really should have like documentation in your calendar or in a planner, who you were with, what you talked about, that sort of thing. You should have more detailed records when it comes to meals and entertainment. And then if you're traveling, same thing. You can't write off your family vacation. It has to have a business purpose. And if your family is along, you really can't deduct the whole thing. So just check with your CPA and your tax preparer on writing off meals and entertainment and travel and things like that, because that's a slippery slope. When should I hire a CPA? If you're a business, and I say, your first year, it's fine to DIY your books and use a spreadsheet. We have our one-page accounting system that we supply. It's a freebie that we offer our clients, and that's fine for the first year. But after that, you really should get into the habit of using a system software. We recommend Xero.com for our clients, and our firm is on it and recommend it to all of our clients. And you get it for free with all of our packages. But I think once you reach six figures, you really need advisory. You need expert advice. You need guidance. You need mentoring if you want to grow, if you want to save money in taxes, if you want to just build wealth in your business, learn how to pay yourself, learn strategies. It can be a real grind and it can be very overwhelming as a business owner. So doing all of these things smartly, you need advisory. I think when things get to be a little burdensome is when you start seeking advice. And I don't mean TikTok advice. Number 12, what records should I keep? You need all kinds of source documents when you're a business owner. And in this day and age of digital and cloud storage, it's fine to keep things on the cloud, but you should always download it. Bank statements, your business bank statements, your business credit card statement. You should always download those and keep those on your hard drive. Those are source documents. You should always keep a copy of these, like forever. Keep them in your own personal hard drive. Don't rely on the cloud storage. Tax returns, your incorporation documents, your bylaws, any kind of governing documents for your business should be kept on your hard drive. your accounting system, you should back that up on a regular basis. Any kind of receipts for big equipment, loan documents for your business, payroll records. Yes, your payroll company has all of those, but those should be downloaded and you should keep those. All of your quarterly reports, all of the year-end reports, W-2s, 941s, those should all be downloaded on a regular basis. Those are documents that, even though you are delegating all of these to other people, your CPA, your payroll company, it's still your responsibility to keep all of those documents yourself. So keeping those in the cloud, that's okay, but you still need to keep PDF copies in your hard drive as a backup on your, I was gonna say on your person, but on your own PC, on a hard drive, in your own home. I think that's super, super important. Okay. Why do I need bookkeeping if I already have a bank account? So we get this all the time too. If somebody hires us to do their bookkeeping or accounting or taxes, why do they need to send us the bank statements? Because the bank statements, the credit card statements are the source document. We have to reconcile to those documents. The linking your accounting system to the bank statement, to the credit card statement is only the first step. It's not the only step. It's just the first step. You have to then do what's like an audit to make sure that the information was actually transferred and it actually came over, and what actually came over is the real numbers, and that they were categorized correctly and that everything went over okay. You have to do that audit. You have to do that reconciliation to make sure everything is in there correctly. And as the business owner, it's your responsibility to make sure your records are correct, that your numbers are correct. So if you don't have linking the bank account, and having the bank account is only the first step, you have to do the actual bookkeeping and the reconciliation part afterwards, because it's only such a fraction of the step that's involved in the whole rest of the processes that go on behind your business. And the bookkeeping, although the marketing would have you believe that the bookkeeping is really easy and that AI can do it for you, trust me, it's not. Accounting wouldn't be a 4-year degree if it was. The CPA wouldn't be licensed in every state and wouldn't be this enormous exam if everybody could do it. So bookkeeping is very necessary. It's very, very difficult. There's a whole science behind it. There's a whole strategy behind accounting and taxes. And the really, really good ones out there are very, very good at it. And there's a whole strategy behind it. So you do need the bookkeeping with the bank accounts and the credit cards accounts, because it's a whole picture that it's creating. There's a whole story it creates. Okay. What's the difference between tax preparation and tax planning? So tax preparation is the actual just compliance part at the end of the year. We're just going to prepare your taxes. We're going to put the numbers on the return in a way that is advantageous for you. We're going to do the reporting on the return and do the compliance work. The planning is trying to get you in a tax advantaged spot so that we can use the laws to your advantage with what you have available to pay the least amount of taxes possible with the rules and regulations as they stand, if that makes sense. So we want to make sure through tax planning, and tax planning can be this year and beyond for many years. So through tax planning, we want to make sure that we are doing our clients, putting them in the best position possible to save them as much money possible with the rules and regulations as they stand. How do owner draws affect my taxes? So owner draw, meaning how much an owner can pay themselves, and we're not talking about payroll, we're talking about just how much an owner can take out of the business, just withdrawing money out of the business. And that really depends on how you're organized. If you're organized as a C corporation, S corporation, LLC, how an owner takes money out of the business and how it affects the business depends on how you're organized as an entity. Some of it can come out tax free, some of it comes out as dividends, some of it has to come out as loan, some of it affects your equity. So it's a very complex question. It's a question for your CPA, and it can affect your taxes on a personal level. And it can affect how you can deduct things in future years if you take out too much money and you reduce your equity in your business too low. You may not be able to deduct losses in future years if you have negative equity in your business. So you have to be careful about how much money you take out of your business at any one time. It's yeah, how you compensate yourself out of your business is it's a delicate balancing act sometimes. So that's another reason why it's really important to know how you're organized and how you can compensate yourself out of your business. So it can have a big impact, not only on your taxes, but your ability on how you can get loans in the future if you take too much money out of your business as draws. Can I deduct travel expenses? We touched a little bit on this when we were talking about meals and entertainment. Yes, if you travel for business, you can deduct travel expenses, air travel, hotel, car, tolls, all of that is deductible for business purposes. You have to have the proper documentation, you have to keep receipts, and you have to make sure it's for business, and you have to document who you're with and what it was for, and make sure you're writing everything down. The more documentation, the better. What happens if I get audited? So we have a whole process for this in my firm. If you get a letter, an audit letter, or a tax notice, we have clients just make sure they upload their tax notice to our client portal, every single page, front and back, and we review the tax notice for them free of charge, and then we let them know next steps. So lots of letters are just computer generated, and they just require us to write a letter on our client's behalf. They lots of times it's very, very easy to fix, so it doesn't require. I know it can seem like a little overwhelming. It's panic mode, but most of these letters are really, really easy fixed. It's sometimes it's just requires just a little bit of a letter from us. Others require us to send in documentation or backup or an explanation. But this is why it's really important to use a CPA or tax professional, because it's quite easy to fix if you're using a tax professional, maybe not so much if you're not. But if you do get an audit notice, respond to it. Never, ever disregard an audit notice, because they just compound. The more you ignore it, they just escalate from there. And just on another note, the IRS is never going to phone you, email you, or text you. They're always going to send a letter. So if you do get a text or an email or a phone call, it's probably fraudulent. You can go on the irs.gov website, and they do have the most popular scams right on their website. So you can see, if you are afraid it's a scam, you can go online and you can see if there's a scam. If you're afraid it's a scam, you can look online and see if it is. Okay. How do I pay myself properly? Again, if you are not sure how to take money out of your business, it really depends on how you are organized. Typically, if you're a sole proprietor, you're just going to take draw. You're just going to pay yourself. There's no formal payroll required. If you're an LLC, same thing. You just take draw. You're not allowed to be on payroll. You just take a draw. S corporations, you are required to be on payroll. You have to have a formal payroll with a payroll company and take a W-2. C corporation, again, you probably want to be on payroll and take a formal, W-2. So it really depends on how you're organized. But again, there's a strategy behind paying yourself and being a business owner and paying yourself. So talk to your CPA or your tax preparer and have a strategy in place on how to compensate yourself between payroll and retirement and draw and all of those things in place so that you're taking advantage of all of these things and tax wise. Why is cash flow different from profit? So cash flow is just the in and out of cash within your business. It's the inflow of cash and the outflow of cash within your business and the timing of the cash of the business. The profit is the sale minus the expenses of your business. And profit doesn't necessarily mean cash, because profit can be non-cash things like depreciation. So profit doesn't necessarily mean cash, because it's more, you can have non-cash things in there and it's more of a tax term than a cash flow thing. So they can mean two different things. And if you are working with a CPA or a tax professional, they will be looking at both of those things to help you grow your business and strategize. What tax strategy should every business owner know? Oh, so there's lots of tax strategies. And again, depending on how you're organized, there's going to be different tax strategies you should be putting in place. But knowing how to pay yourself, knowing what retirement plans are available depending on your entity and structure that you should have in place are big ones. Okay, what tax strategy should every business owner know? So there's lots of tax strategies that you can layer into your business. And it really depends on the industry you're in and what kind of entity you are. And like where you are revenue wise. But I think the biggest ones are making sure that you are the right entity for like where you are personally, financially, and business wise in your life. Okay. Making sure that all works for you financially, the type of entity you are. Having the right retirement plan in place and funding that retirement plan. Having the accounting system you need and having it up to date. Having those things in place. And then tax planning, making sure you're doing tax planning for the business, making sure you are compensating yourself properly, making sure you're using payroll, draw, and your retirement, all three of those together as a strategy to take the wealth out of the business, being mindful of the taxes, and being able to compensate yourself is a great kind of wealth and tax strategy. And it's a delicate kind of balancing act to make sure you have all of your pulse on all of those things. And it's hard to juggle all of those things, but it's really important because you have to keep your eye on all of those things, plus cash flow, plus know when to replace assets because you want to take advantage of those things and when the time comes, right? So there's lots of moving parts when it comes to growth strategy, tax strategy, wealth management, all of those things. And that's where a really great CPA and financial advisor comes in, because they're helping you. It's not just you keeping your eye on these things, it's them as well to help you and meet with you and keep your eye on all of those things. So that's what you should be keeping your eye on as far as strategies. It's not just a tax strategy, it's an overall financial strategy for your business. And the taxes are just kind of roll into that, so to speak. And lastly, bonus, what's one tax question I wish more business owners would ask? I wish more business owners would just simply ask questions. So many business owners now are just hell-bent on scrolling and seeking advice online instead of asking the professionals. And I know a lot of my colleagues are retiring and selling their practices. I can't go on my emails without seeing another tax practice, CPA, selling their practice. And a lot of CPAs my age are retiring. And these are my, the CPAs who are my age and a little bit older who have all of the knowledge right now and they're all retiring. And unfortunately, these are the ones who you want to ask the advice of. You want to ask the questions. And it's unfortunate because they're all going to be gone soon. So I wish instead of seeking the advice and Googling the advice, they would just ask any questions real to the real live human being advisors out there instead of Googling it. Any questions. Any question is a good question. So that's it for the 20 or 21 top tax questions for business owners that I get in my practice. Make sure if you have a business owner friend who needs business advice, share this episode. Make sure you like and subscribe and stay tuned for more great advice on Behind the Business.
Thanks for listening to Behind the Business. If you found this episode helpful, please share it with another business owner who could use some real world advice. For free resources, tools, and to submit your own business questions, head on over to my website, PamelaHiltonCPA.com. Until next time, keep building smart and keep looking behind the business.